Hello. So this week we are talking about income statement analysis. So what is profit? Why is it an estimate? So the reason that it's an estimate is that it's hard to record the fact of profit because the income, the revenues can be recorded at a number of different times, and sometimes different things are recorded in different ways. The example of software being sold and then rolled out over a period of time and then maintained over a period of time, those are all questions as to how that gets allocated, if it's broken up over that period of time, if it's front loaded or if it's back loaded. So that's why it's an estimate. It's hard to gauge that. The important thing to remember is that profit and cash are different. So profit is what's left over after all expenses, including production or servicing, all those costs, plus operational costs, plus taxes, liability, servicing, all those kinds of things. What's left over is profit. And cash is what's actually in the bank, what's on hand. So the reason that a profitable business, quote unquote, profitable, because they could be profitable, the things they sell could be worth more than what it costs to make them. But if they have no money in the bank because they haven't collected on those things, or they've spent ahead for the next year or whatever it happens to be, that's how a company can get into trouble and go bankrupt even with profit on the books. So the biggest thing I learned this week was really just taking a look from this high level, and reaffirming why that's important, because I can sometimes get lost in the minutia of these individual transactions, or only looking at certain parts of the books and not coming back on a regular basis often enough to look at this snapshot of where our business is at, how the business has been doing, how it's tracking from period to period, whether it be month to month, quarter to quarter, year to year. So gross profit is what is left over after you have revenues and then everything that has to come out, like your cost of goods sold. If it's manufacturing, like the business I'm in, that's the direct labor, that's the raw materials, the box, the parts, all those kinds of things. That's the cost of goods sold, and so that's what's your gross profit is what's left after your cost of goods sold and direct labor. The operational profit is what's left over after all of the managerial stuff. So what we're doing as managers, what we have to do in sales that are not direct sales, like marketing costs, following up with customer service, having the website, all those types of things. So that's why that's important. I guess doubling back to the gross profit, why that's important to look at is because it tells you how efficient you are, how profitable, and viable what you're doing really is to begin with. Then working with that next piece, your operational cost, how efficient can you be in managing what's left over? And both those things are important for those reasons. You have to have efficiencies on both sides. And then your net profit is what's left over after those things, but also what you owe in taxes, or if you owe interest on any liabilities, then your net profit is what's left. That's what's really left, and that's what you can then distribute to stakeholders, shareholders, or reinvest into the company. So a real example of that would be like looking at my company in the year 2022, when it was decided that we would spend $200,000 making these molds. There was money on hand, cash on hand to do that, and that's the net profit showed, hey, we're going to have this money, so a decision could be made, obviously gobble up the entirety of the net profit, but that's, another story. One judgment call is going to be depreciation assumptions, I think. So when we look at the molds, I actually dug up the depreciation worksheet from the depreciation detail listing from the taxes of the business a couple of years ago, 2 years ago, and I'm looking at like what's been depreciated, the scale of it, and so the most expensive mold was $56,000, and that's been completely depreciated already only 3 years later. They're supposed to have a 7-year lifespan, which in all actuality is pretty conservative, because a lot of times these molds can press up 1 million parts, and so there's no way we would hit 1 million parts with one of these molds in 30-40 years probably. I mean, hopefully we would, that'd be great, but realistically you're talking like 10,000 a year. That's going to take a long time. Some of the other ones, I don't really understand who made these decisions. This is something I'm going to have to talk with the accountant about now that I know a little bit more about it. But yeah, it's interesting that some of them have depreciated a little bit, some all the way, and some not even hardly that much. So maybe a decision was made to break up the depreciation amongst them. But I don't know what the reasoning is. It'll be interesting to get real world feedback from the accountant on that. Can't really ask Ralph, since he was the one who possibly made the decision and has since passed away. So one red flag that I found really interesting in my discussion was with AMD, is the company that I chose to talk about in my discussion piece. They had a one-time cost, if I recall, it was like $188 million or something like that. So there's this one-time cost that's not supposed to be a recurring cost, and if you look back over the previous couple of years that were in the graph, there was not any other one-time costs, and so it's possible that that's an okay thing, that they were doing some restructuring, they changed something about their operational facility or their manufacturing facility, and it makes sense when companies are pivoting more into AI, which especially for a company like that is where all the money is, that is not necessarily a red flag. But if you were to see year after year those types of things happening, I think Intel actually was doing that, where they have these one-time costs that kind of vary but are substantial, like hundreds of millions of dollars every year. That's probably a sign that they're not accounting properly for something that is actually occurring pretty frequently if it's happening every year. So understanding income statements is going to help me greatly in my career, because I need to know what the hell's going on. And there's a lot of things that you can discern from an income statement, whether that's as the manager of the business, or as the future owner of the business, or whatever business I end up owning, because I will be doing entrepreneurial activities, whether or not I have to have a job to hold it down while I figure out what I'm doing, or whatever it happens to be. But also from an investor standpoint, because my goal is to start investing more and being able to evaluate, specifically targeting companies that I think have potential going into the future. I can validate some of those ideas and be able to understand what I'm looking at in a more insightful way. So yeah, I think that's good to wrap it up. So hopefully I didn't ramble on for too long. Thanks for watching.